Hello everyone, welcome back to today's video, and today we are going to talk about something that happened last week at the central banks that is going to change your life most likely very much without you even noticing. But before we do, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything, or leave me a comment. Let's dive straight in, because last week was a bit of a special week when it comes down to macroeconomics and the central banks. Because on Wednesday, the Fed, the Federal Reserve Central Bank in America, said that they will start tapering up a little bit more. So that means they're taking liquidity out of the market and they're going from 15 billion to 30 billion a month. That's a lot of money, I know. And next year they will most likely raise interest rates 3 times. Usually they do that with 0.25%, so 0.25% every time. Within a day, also the Central Bank of England said the same. They will start raising interest rates. And also that day, the ECB, European Central Bank, also said that they will start tapering a little bit more and then start slowing buying up all the bonds. Is this a coincidence? No, absolutely not. These are the 3 biggest central banks in the Western world, and they all say this within 48 hours. They could have picked the entire year to do this, but they all decided to do this within 48 hours. So this is absolutely not a coincidence. Then the reason, of course, is why are they doing it? They are doing this to fight that big monster called inflation. Because inflation right now is real, it is rising, it is going very, very fast, and there are only a handful of tools to create and to defeat inflation. But to understand how we got to the point of today, the cause actually lies in 2008, the economic crisis. So if you were not around or you were too small at the time to understand what was going on, the whole world was overloaded with debt. Sliding into economic crisis with the fall of Lehman Brothers. A lot of people defaulted on their loans, so it said we cannot pay back the loans anymore, and that had a domino effect in real estate and other sectors where no one could pay anyone back anymore, and at a certain point there were a flood of bankruptcies, real estate were going down the drain. At the end the government said okay, we are going to help you out and build out all kinds of banks and other big institutions so that the economic system that we have wouldn't collapse. Economic system in this case being the capitalism with the big currencies like the pound, the euro and the dollar. They did this by lowering the interest rates and start printing money. And once they start doing that, also a lot of people said, if you are going to do this as a central bank, you are going to get into a road with no return. And I will explain you more about that later. So quickly, how does this affect you? What is the role of the central bank in your life? Just real quick. So the central bank is kind of the bank of all banks in a certain area. So the Central Bank of Europe is kind of the master bank of all the banks in Europe, and the same happens for the Federal Reserve in America. They kind of overlook all the banks in the States, and you have that in a lot of areas and regions and countries in the world. And the goal usually of these central banks is to keep inflation at around 2%. Then just most of the economic systems can just normally exist and operate. But shortly also after the crisis, some of the central banks kind of also claimed that they were also responsible for the economic growth. So what are kind of then the tools that they have to do this? Well, the most important ones are the creation and destruction of currencies, of money, and to rise or to lower interest rates. And they did actually both. So by creating a lot of money and lowering the interest rates, therefore they pumped a lot of liquidity into the market. And when there is like a stable demand, but they're offering more and more and more, with every product in the world, then the price go down. So the price of money, the cost of money, interest rates are then going down because there is so much money going around that it's easy to get it. So the cost is therefore also much lower. The idea behind it is that we are not going into a economic recession or depression again. So the idea is that the central bank said whatever happens, we cannot have an economic crisis anymore. We had a lot of debt, and what we're actually going to do is creating more debt. It is almost saying to a patient that 100% is going to die, in this case capitalism, is saying, you know what, I just give you a very strong shot of a medicine or adrenaline to keep you awake, to keep you alive, so that we have a little bit more time. And that is kind of what they did with creating so much money. They're just kind of kicking the can down the road because the problem is still there. There's a lot of debt in the world. There's now even more debt than there were before 2008. But because money is so free, a lot of markets, companies and big parties in the world are almost now addicted to this kind of drugs that we call free money. So what then happens is that the central banks lower again the interest rates, and then for regular banks like say Bank of America or Wells Fargo or any other big bank in your country can then lend money from the central bank for very cheap. So let's say it was first 5-6% and the interest rate goes down, and then lending money, so the cost of money becomes cheaper and cheaper. That's why now also the price of a mortgage is pretty low, because if a bank can lend the money from the central bank for let's say 1%, they will offer it to you for 1.5%, and the 0.5% is then their profit. That is kind of in a nutshell their business model, to just pump the money around in the system and take their cut somewhere. And that's also the reason why you barely get any interest rate, or maybe even a negative interest rate on your savings, because why does a bank want to have your money? They can get unlimited free money from the central bank, so they need to pay you to get your money, although on the other side they can get the money for free. So on the lending side, a lot of money in the system, a lot of circulation is good, because then you get a low interest rate. But on the other side, for savers, this is horrible, because you're not getting anything anymore on your savings. And of course, all of this then comes with a downside, and that is the road of no return, and that is high inflation. Because if you have a lot of money in circulation, and money is kind of quote unquote everywhere, and you print a lot of it, we also have seen this in cases in the past like Venezuela or Zimbabwe, then at a certain point it is worthless. And that is kind of what we're seeing right now. So the central banks knew that once they started printing, sooner or later you will get high inflation, because the circulation reaches a certain size that people are saying, yeah, I don't need to have any money anymore because I already have so much money. So yeah, I don't need it. So sell it to someone else. Okay, this person then, no, I also already have enough money. Sell it to someone else. And the selling in this case, again, is interest rate. Oh, okay, I also do want, okay. And then everything collapses and no one wants to have it anymore because there's so much circulation, so it's worth nothing anymore. And on the other hand, let's say you have something there's only one of, let's say a beautiful car, a unique home, or an NFT, then the product or asset is super scarce. There's only one of, and therefore the price also is pretty high. So right now the central banks are kind of tied up with both arms. One arm pulls and says, oh, we have too much inflation, you need to do something about this, raise the interest rates and take liquidity out of the market. And the other arm is saying, yeah, but if you do that, then the cost of money will become super expensive, and then the loans that company have or people have, the cost of those loans will become super high. They cannot pay it off anymore. They will maybe go bankrupt. They need to fire people. You might slide into an economic recession again. So the patient in this case, capitalism as we know it, is kind of ruined and sick by human interfering. But they also kind of did this because the central banks are afraid that if they would not act, we would again slide in an economic recession, or that maybe huge parties will take advantage of this, let's say big Wall Street parties, to push the market into certain directions. Let's say they go completely short on certain indexes or stocks or real estate, start selling off a lot, then that could collapse and maybe spill over into other parties. But when there is like a base, a fundament of always liquidity, we will always buy up your asset, then you kind of keep the patient alive. So what does this mean for you and me on the short term, intermediate term and long term? Well, on the short term, most likely nothing. On the intermediate term, the question of course is, will inflation top out and will inflation go lower? And on the long term, of course, the question is, will the central banks being able to really rise all interest rates that they want to a healthy level? Because again, if they start doing that too fast, then you might see an economic decline or a recession, and then all kinds of people and politicians will start screaming, lower the interest rates, print more money because we're going bankrupt and we're going down the drain. And then they suddenly start printing again. So they're constantly bound between these two factors. So the actual outcome, really no one knows. It's going to be very exciting. What am I going to do? Absolutely nothing, actually, because it took us years to go to zero and negative interest rates, and it will also most likely take us years again to go to a kind of normal, healthy situation. I think my life will not change dramatically overnight. It might take months, even years, and then you at a certain point can take a conclusion. Then you can say, hey, my portfolio went up or down, or the interest rate on a mortgage went up or down. I'm also right now not running to the bank to get as much money as I can, because tomorrow they will rise interest rates and then suddenly everything becomes expensive and it's the end of free money, because most likely it will take weeks or months before we see any difference, because everything just comes and goes in a flow. And then last but not least, there's the scenario about stagflation. It is something that Japan is battling already for a few decades, where you have a stagnant economy and a high inflation. So again, as soon as they start rising the interest rates, then the cost of money becomes expensive. Companies will go bankrupt, can't carry the debt anymore or the cost. And once they start lowering again, you get a higher inflation because there's already so much money in circulation. So it's constantly going up and down. And that's what I mean with the patient in this case. Modern capitalism is sick, and actually you should have a replacement of the system. It's also called the Great Reset. I will make a different dedicated video about how that works and what it exactly is. But it is very interesting to see if we are going to follow the kind of Japan scenario, or will we follow maybe other country scenarios like Zimbabwe, Venezuela, or Turkey right now with a high inflation. My bets are probably on the stagflation scenario, because I think that a lot of central banks will do everything they can to fight the inflation, because inflation, of hyperinflation, is absolutely the destruction of Western capitalism. If you have hyperinflation, then what is money still worth? Everything you built for in the last few decades will just crumble down. What is then still the price of a bread, of milk, of a house, of a car? The price of money to lend it so you can build something, you can invest in people and products and services. So once you start going down that rabbit hole of super high inflation, and right now it is high, but it's not hyperinflation. But I think once you go down there, it is the end. And then you really need a big reset and a replacement of the current system, maybe the dollar, the euro, capitalism, whatever. So to avoid that scenario, I think that then the central banks might choose for just a low economic growth, or maybe a little bit of a decline, than having super high inflation. So to sum everything up, we have three major central banks in the West that all decided within 48 hours to start tapering, taking money out of the market and rise interest rates. Where that will take us, I have absolutely no idea. Maybe we will get higher inflation, a lower inflation, and economic decline. Maybe we will get stagflation. It's anyone's guess. It's very hard to determine that, because there are so many factors in play. On the short and immediate long term, I'm not scared. I am not taking massive action, because again, it will take months before we will see a result. I just see the central bank as this gigantic oil tanker that needs to steer, and a few degrees to the left or the right can make the ship turn, and from the distance you will see the ship turn before it hits the shore. So it will give you enough time to act. Of course, I will monitor all this kinds of stuff. I like it, I'm interested in, I'm reading about economic and economic systems, and when everything significantly changes again, I will try to make you a video. But don't forget last week, because who knows, maybe that was the end of cheap money, that was the turn in your economic situation, and will maybe start off a new unknown economic situation for the next decade. Exciting stuff. Thank you guys so much. Please do me a favor, like, subscribe, click on the bell, all that good stuff. Leave me a comment, share with your friends. Thank you guys, and I'll see you next one. Bye bye.